Do you remember the tax rule for Cash App, Venmo, and PayPal? The one that was going to make over 20 million people panic about every single transaction? The one that was supposed to start next year, January, with just a limit of $600? Before I go any further, I'm Veronic, an accountant, a tax strategist, and a business coach who's always looking for ways to help you keep more of your money. Don't forget, if you need help navigating these changes, click the link in the description for a free consultation. Now, let's get into what this means for you. IRS had everyone on edge with the $600 rule. It was only meant to crack down underreported income, but it would have also flagged people for things like getting paid back for a birthday gift or splitting dinner with a friend. It created a massive administrative nightmare and had caused so much anxiety. Guess what? With the big beautiful bill that was signed on July 4th of this year, it completely canceled the $600 reporting rule. This is a huge win for small business owners and all everyday people. With the new law, it scraps the requirement to report transactions under $20,000 or with fewer than 200 transactions. That's right. It's a massive jump from just $600. So now let's dive into chapter 2. What does this change mean for you? Your tax obligations have not changed. You still need to report all of your taxable income, regardless of whether you receive a 1099-K. And like I always advise, keep good records anyway. It's always smart to track your transactions, especially if you're a business owner. A 1099-K is just a document, so not getting that document does not mean you don't owe taxes. Your tax liability is based on your actual income. So gifts and reimbursements, they are not taxable. It always remained the same. They were never taxable. And also paying a friend back for dinner, it does not consider as an income. So now let's go to chapter 3. I want you to see how massive these changes are with some real people examples. Let's take a freelancer, Matt, for example, influencer who makes about $7,000 a year using Venmo. Under the old rule, he would have hit $600 limit by March. The platform would have issued her 1099-K by now. Because of the new rule, he's completely off the hook from the administrative headache. The small business owner, Nat, who runs a small jewelry business on Etsy, she makes about $5,000 a year. With the old rule met, she get a 1099-K halfway throughout the year. But with the new rule, she will not get a form at all as long as she has fewer than 200 transactions. And John, who uses Cash App for everything, selling all electronics, getting paid back for dinner. Under the old rule, John, he could easily have hit $600 and had IRS looking at his activities. Under the new rule, unless it's a clear business that makes over $20,000, he will not receive a 1099-K. The elimination of the IRS $600 rule is a huge win for everyone. The new law is much more sensible approach that focuses on actual business activity. Don't forget to subscribe to my channel for more of those tax strategies and law updates. And of course, if you need help with tax planning or tax preparation, click the calendar link to schedule a free consultation.